Everyone remembers 2025 as the year AI stocks dominated, but Ray Dalio argues the real story was hidden in plain sight: the devaluation of the dollar. While the S&P 500 looked strong in USD, it actually fell 28% when priced in gold. Dalio's 2026 playbook is built on a regime change. He sees US assets having a negative risk premium, meaning you aren't getting paid enough to take the risk compared to bonds. The juice has been squeezed. So where is he putting capital? First, the highest conviction trade, gold and gold miners, tickers, GLD, GDX. This is his hedge against currency debasement and geopolitical chaos. Second, the geographic diversification trade. European stocks outperformed the S&P by 23% in 2025, Japanese stocks by 10%. Dalio's data shows capital is flowing out of US-only portfolios. Tickers to watch: VGK for Europe, EWJ for Japan. And here's the controversial one. China. Chinese stocks outperformed the S&P by 21% in 2025, crushing the S&P. Most people are avoiding China due to geopolitical risk. But if you believe in the deglobalization trade, China's domestic consumption story is just getting started. Ticker, FXI for China, large cap, or KWEB for China tech exposure. Third, emerging markets as a basket returned 34% last year. This is the deglobalization winner trade. As supply chains diversify away from China only, countries like India, Vietnam, and Brazil benefit. Ticker, EEM or VWO. Fourth, the global military spending boom. As the world shifts from rules to power, defense contractors like Lockheed Martin, LMT, and RTX, formerly Raytheon Technologies, become essential portfolio armor. For ETF exposure, ITA, iShares US Aerospace and Defense, is an option. It's the standard benchmark alongside the individual stocks. Fifth, government-directed capitalism. He likes the companies building the new factories. US manufacturing giants like Caterpillar, CAT, and Deere, DE, benefit from the reshoring trend. For an ETF, XLI, Industrial Select Sector SPDR, would be the broadest way to play the reshore theme without picking winners. And finally, energy. With the new US intervention in Venezuela, Dalio sees a multi-year infrastructure rebuild that changes the game. The smart play here isn't just betting on the price of oil, it's owning the giants who will actually do the work. For example, ExxonMobil, XOM, is the primary integrated player with the scale to handle these massive projects, and Chevron, CVX, for balance sheet diversification. For ETF exposure, XLE, Energy Select Sector, SPDR, and OIH, Vanek Oil Services, for the specific service infrastructure play Dalio mentions. But the biggest risk isn't on a balance sheet, it's political. Dalio calls the current US policy a levered bet on capitalism. While this boosts stocks now, it widens the wealth gap. He sees a massive clash brewing between the hard right and the hard left in 2026. This domestic instability is exactly why he is moving capital out of the dollar and into gold. But equally important is what he avoids. Dalio is explicitly bearish on long-term treasury bonds, TLT. With $10 trillion in debt needing to be rolled over, the supply is too high and yields could spike. He also specifically warns about illiquid assets like real estate, private equity, and venture capital. He says their current valuations are arguably fake. They haven't marked down yet. As debt rolls over at higher rates, he expects a liquidity squeeze here. Avoid funds that lock your money up. And the big one, US large cap growth, SPYQQQ. He sees valuations stretched with a PE at bubble levels. The risk-reward is terrible unless you believe productivity gains from artificial intelligence will be massive. The bottom line for 2026? Diversify away from the US only 60-40 portfolio. Overweight gold, non-US equities, emerging markets, and the companies building the new war economy. This isn't about abandoning the US, it's about not being concentrated in a single currency and a single market. I've linked the full ticker breakdown and Ray Dalio's original post in the description. Subscribe for additional insight and future deep dives.